Okay, so pulling back to about previous Globex high right in here. And we're looking to see if it'll consolidate here a few bars and maybe give us a quick move. So I'll go ahead and print a bar here. Tesla's getting ready to rip. I think it'll go right back to the top of that that move to 264 there. But this Intel Corporation thing, you may have seen that pulled off like a 38 million% return on that. Funny how that works. So essentially, when I flipped my position, so I turned half of my debit spread position into butterflies. So for the entire position, I had an average price of 4 cents per spread. So I sold the other half, or sold leverage against the other half in selling those credit spreads at 8 cents. So now I've covered 100% of my risk, and I've also made sure that I have a 0 point to start from, so that's a free position. When doing so, you get a little slippage. So there'll always be a little slippage in options transactions, and in this case it's like 0.02 of a cent. So when you're seeing that 40 million% return, it's 40 million% higher than 0.02 of a cent. That's why it's showing those numbers. It's kind of fun to grab a screenshot of that and kind of show, like, you know, this is probably the biggest return in history for percentage, but it's just based on a weird slip factor on the options. In theory, when you sell leverage against leverage or against a synthetic, you should see 0. It should balance, but there's always that little bit of slippage, and in this case it was about 0.02 of a cent. So it just makes it look impressive. Staggeringly impressive. Can you imagine having that on like $1 risk? You'd be retiring in a day. All right, getting some pullbacks here. So yesterday I had quite the adventure. Ended up having to take an overnight drive the night before and pull an all-nighter. Left my house at 9:30. Didn't get back until 10:30 the next day. So that's why I was just destroyed yesterday. So I could not trade. Today I'm still a little kind of blah from the whole experience, but I got a good night's sleep. So as soon as I get the second cup of coffee going, I should be doing pretty good. Alright, so you can see we've made a bearish 1-for-1 right there on our Bollinger chart with the 5-second. And now we can probably start printing a fan line. I'm going to do it from pre-market though. Just going to load right in here, because that'll give us the split. There's our common line right there. And if we break below, we can just print another fan to the downside. Alright, so we broke that. Let's go ahead and give it the fan. Can you guys hear me okay?
Yeah, I can.
Okay.
Yeah.
I know we were having some audio difficulties the other day. Just want to make sure we got them resolved. Okay. So in all likelihood of what we're expecting today is just a big range day. In fact, we probably got a pretty good chance of warping this into a diamond. Notice we got range expansion here. It's a big old megaphone. We could compress back down into a tightening range by about 10:30 or 11. Let's see if we get that. So if we get that, then we can just draw a diamond and pick out our channels, and we might have a couple of swings. So here comes a scalp right back to mean revision, which is right here. Got Tesla kind of rolling into a rising channel, and INTC is kind of finding some support here. So I don't have any of my drawing information from my Ford chart from Webull in here, but I do want to keep an eye on Ford today. I guess I can flash back and forth to it. Made it through that zone. Watch for accumulation on Ford. It could very well pick this zone right up here to 1470-ish. There goes Tesla running back up. Got a little tweezer bottom here, but we're still sitting right at kind of a control zone right in the middle of our fan here. Oh, help if I unlock the chart so I can drag it around. There we go. I haven't even looked at my other account. Got to figure out where I'm at. How many millions of a percent am I up? Crazy, crazy number though, man. That was just staggering to put on there. I'm like, this is fun. Let's see what kind of reaction we get from this. I kind of put it out on my Twitter, and people are like, what the hell are you doing? I think I broke it. And I wanted to mention I do have that bearish 1-for-1 on target set up, and it could still break out, but then what's his name went and bought a bunch of it and made a big deal about it. See if I can find the dude's name. Yeah, I can't remember. Some big name bought a bunch of it though, so we'll see how that goes. Throw it on later. Alright, we've got range building here. We're respecting a couple key fan lines. Let's see if we get a quick signal for a buy or a sell. So I'm still sitting at 38 million% on my Intel Corporation position. It's just so neat to be able to do that. I wasn't going to see that coming. That was hilarious. Oh, nice pullback on Amazon. I showed you guys the Amazon setup earlier where it went exactly to target on the 2-for-1. Flash over to that real quick. We're back in liquidity on Ford, so Remember, this is going to be a toggle zone. It'll be either supply or demand once we break out of it. What was it? Amazon? Oops. Yeah, that's a nasty pullback. They must have got a news flash. But we have that beautiful 2-for-1. Went right to target, pulled back. Watch for today to settle kind of at a key zone about 125. If it can't hold 125, we know it'll likely hit a mean revision. Just take us down here to like 116. That could be a hell of a move, but it's also likely to be a hell of an opportunity. So keep an eye on Amazon. We could see some good plays on that. In fact, if it gives us a good enough bounce and implied volatility tends to fall out on witching days, I might go so far as to put this on a condor, throw a couple of put and call debit spreads on it and see which way it breaks. That's kind of dragging the market a bit today, so we'll see if we get our expected range day or not. If we get a trend day today, it'll be kind of rare to see a trend day on a witching day, but it is not impossible. It can happen. And at that point, I'll start drawing a little bit differently with the patterns we have here. So we made that revision. We're back into the next fib level. Kind of bouncing back. This becomes an angular resistance here, so watch this fib line. If it rejects here, we'll get a big old 1-for-1 out of this, and it'll stick us right down into our lower range, down into this common trend line here. So 440.80 would be a target on a breakdown. Effectively, when you stack fans like that, once you've got the key or common trend lines established, you've got basically a mirror image of it down here. This becomes your first leg. There's your accumulation. A break would be second leg right down to here, 440.80. And you always expect a pause or accumulation on every fib level, every fan line. Throw Apple on here real quick. Yeah, looking a lot like Amazon, same kind of deal, big old pullback. Let me see here, daily. That's just been one hell of a strong trend on Apple. But it's outside any known control area, so likely to pull back. We could see it hit about 183, 185 right now. That's setting up a big old 1-for-1, isn't it? Just to have a quick reference on this thing, we'll run it right to here. So yeah, about 183 and some change. All right, we broke right down to that target, 440.80, a little overreach. Done. Very nice. Next move is going to take a couple bars to set up. So that was pretty easy expected. On the 1-minute chart, you've actually got a 2-for-1. You got a block here, and a block here. Right from common trend line to common trend line. How did I do that, huh? Just find any accumulation. It could be anywhere. And if Apple doesn't hold up right here and reverse, likely to finish the move. Where would that take us with SPY? Well, that can take us all the way down into previous liquidity zone. And notice we've tapped it. See this green area here? That's a known liquidity zone. And let me see if I can pull out and give you an idea of what that looks like. That's this huge block here. Whenever you have a measured move, it becomes a giant liquidity zone. This was the massive 1-for-1 that we had on the daily chart, right? Big old 1-for-1. So now we're pulling into that as a support area, the top of that block. If we start breaking into it, we start looking for mean revision targets, and we got one way the hell down here, one here, and we got a key pivot here at about 437. 15-minute chart. See if I can get the view to align. That's not giving us anything. Huh. Didn't give me that button. Okay. See, it's kind of weird. I thought Weeble was the only one that did this. This is a little bit skewed from our 5-second chart. So I drew this on the 5-second chart. You'd expect the common line to be respected here with looking exactly like this, but it's not. So you got to wick through that all the way to this zone on the 1-minute chart. One thing we do get from it, though, is we get a nice little liquidity zone right here. This is going to be where there's some buyers. Anytime you see a wick, any time frame, it's usually a failed breakout because there was lots of limit orders waiting there. And also, that's right to the top of our giant 1-for-1 block right there. So we know that's a known area. All right, Tesla coming up to resistance. See if we accumulate and break out here or we break down. Put that into a common view. Yeah, this was an analyst target, by the way. 216. Shows what they know. We still have a little bit of a move to finish up to about 281, 282 on Tesla. And that's very possible to happen today in spite of the witching. See, I'll find the way to share drawings. So when everybody's on TradingView, I can just send a link to get all my drawings transferred right onto your chart if you're interested. I know there's a way to do it. I just haven't explored how to do it. All right, we're accumulating here.
Get me that discount on TradingView and I'll figure it out.
There you go. Yeah, we're working with that. They've been overwhelmed on a project themselves, so it's kind of hard to get correspondence back in a timely manner with what we're negotiating with them right now, but we'll get there. All right, here comes our push. We're likely to go and revisit firstly the little 200 period here, and that takes us to the base of a mean revision zone. So 441.55 would be a good target. See if I can expand that. Takes us right up in here.
Yeah, my free trial expired, so I'm not using TradingView right now.
Gotcha. There goes Tesla. See ya. We're going. Finish that move, baby. Love it.
My thing with these with paying money out is I have to wait till I'm making money and enough to cover the costs of things like that, right?
Right. Yeah, that's kind of the way I do it. I mean, I've always been very, very frugal with it until I'm making crazy money. And even while I'm making decent money, I don't like paying for services. It's like I can do fine without them. You know, I'm still okay using Weeble in spite of the screwy candle situation. It's still usable. It's still very usable. So if I can find a free service that does everything I needed to do, why would I go mess with a paid service? But with TradingView, they're treating us pretty well so far. So we'll see if we can get you guys a massive discount on their services and go for that. All right, we failed to revisit that 441.55, but we broke right under this guy. We're making another quick 1-for-1, probably right back down to our giant 1-for-1 box, which is right here at 440.86 there. There it goes. And that is knocked twice on that. Sometimes when you hit that after an accumulation and nail it 3 times, you end up seeing a big old bear flag right here. And if that's the case, this becomes a measured move leg altogether. So then that sticks us all the way down with a target just by my eyeball around 439. Let me draw it real quick. Now I'll probably delete this one because this chart's busy enough. Yeah, about 439, see? So when you hear me say swag it, you can kind of take this move and just kind of eyeball where it should be. Just use your imagination and reprint this entire trend right down to here. So we'll keep an eye on this. If we accumulate here and we start building a big old bear flag, that is the leg for a measured move. And plus, we can take little pauses in between. We could repeat every time it came and paused and reverted back to an angular resistance or whatever's in play there. That's probably angular resistance channel. We can expect that as well. Tesla's just saying, to heck with it, I'm rolling. Apple's accumulating here though too, so be watchful of that. We're right in a basing zone. This will either be a bear flag and finish our 1-for-1, or it will float here and come back to a mean revision up to about 186. And we know that Apple is about 7% of SPY, so specific candle break on MTB. Let me get that. While we're waiting for this accumulation to fall out. I have the drawing for that here in my Weeble app, so I'm going to go ahead and pull up Weeble real quick. So essentially we're waiting to see if it'll break this angular resistance. And if you pull it up on the 2-hour, it's like right up on it. I'm looking for an entry after a break with a trend. So I want to wait probably a couple more days on this. But we're looking at some tighter structure here. So let's go to the 15-minute chart. We've got the makings of revision has happened. So we have this guy down to here, about half of that. We even blew past it and went up in the upper range of it, but we're more or less completed a mean revision of that trend, and we're accumulating here. So ideally we accumulate for a day or two and then we start to build a trend. We went right to the bottom of the 1-for-1. This is our first move. This is our second move. The expected 2-for-1 is outside of this angular up here. when you get into the tighter time frames on stuff that you drew on a daily chart, you start to see some weird stuff happen with the lines, but you got the general idea of where they should be. So if we get back into this zone here and accumulate, it might take a little longer than a few days to get through this angular. It might just slope down in this whole range. But the moment we start to build a trend outside of this angular, that's when we're going to take interest in it. So it's on the watch list, but it's not a fully developed setup yet, other than the fact that this is one big descending channel, and mean revision takes us about, or base of mean revision takes us about to a nice 2-for-1. The actual mean revision of the entire trend here is up a little higher. It's actually right up here at about 151, 152. But I kind of drew this modestly because I know that there is a nice 1-for-1. It's about, got close once, and if it finishes and follows through, it'll finish a 2-for-1. So it's kind of a wait and see on this one. It's not quite fully developed yet. But if you look back on a couple of the other ones I've called out, they were just methodical. Where'd they go? Yeah, Pan West was a great one. And I need to keep an eye on SPY real quick. Give me 1 second. Yeah, we're still building that flag. So Pan West was pretty awesome. Beautiful 1-for-1. Built a nice setup on the weekly even. That's all run and done. There is a chance that this can build us into a 2-for-1, and the fact that we broke out above the 1-for-1 is a good sign. You can see, like, if you take this as your first move, there's your mean. You'll get, you know, a couple deviations outside of the mean, top and bottom, and accumulate. That's kind of normal, and that could be what we expect to see here. We could see it pull back and kind of run in this area. I'll go ahead and draw the 2-for-1. I'm a little skeptical on whether it'll follow through or not, but the 1-for-1 was just glorious. That was an easy trade. So let me draw the box here and just drag it up on top here. I know if this trend gets a little more heat under it and starts to accumulate and break out, we could very well finish a 2-for-1. So it's just something to kind of watch. And if we look far enough left on the weekly chart, we can see that this is potentially a giant 1-for-1. And I'll draw that briefly and delete it, but there's a chance of this whole thing going to town. It's one of those companies. It's got a, you know, lot of tech influence here. Palo Alto, Silicon Valley, basically. Got one, and 2-for-1, and it blew out into a nice diamond. Accumulated, broke down, came to a mean revision. That's where our 1-for-1 set up, and the 2-for-1 is possible, even an overshoot for a giant 2-for-1 or 1-for-1 up to here. So I'm definitely going to be interested in trading that stock. And lately we've kind of been in a recent times still trading SPY, scalping some options chains on that. But equities have been just awesome plays lately. So I've been focusing a lot of my size on equities. My Intel Corporation position is pretty high size-wise, and so is my Tesla position. So those are all doing great. And equities have been awesome to trade with options, whereas the implied volatility is so low on SPY options, it's better to make longer term swing trades on them. But the only downside to that is, although the implied volatility will crush price on those quite a bit to give you cheap entries for condors, the time decay is still a high factor on SPY, even with spreads. So like you're looking at, theta numbers of like 0.1 in some cases on weeklies. Like, is it really worth putting a swing trade on? Yes and no. So if you're nimble enough and you can catch a really quick play on SPY, you can swap half of your position into a butterfly and leave the other half alone. I certainly did that the other day and did very well with it through FOMC. But the factor is that was leading up to FOMC. It was leading up to an implied volatility event. The only thing that paid me, because my options were so far out of the money, was the implied volatility swing. Time decay was still a threat, but my positions were so cheap there wasn't much left as far as premium in those positions to be eaten by time decay. So time decay factors by the premium paid. As far as running spreads versus straight options, you've got some advantage there, because you can still beat the time decay if you have a stupid cheap entry, and that's what being so far in the money is good for. The probabilities go down, but you can still have a very minimized controllable loss factor into that trade, and you can take advantage of expected higher volatility events like FOMC. It's kind of rare that you have such low IV going into something like that, but it does happen, and that was certainly worth taking advantage of. In that case, I was able to cover my entire risk of the condor position with one butterfly flip on the call side. During FOMC, when price dropped down low enough, you guys heard me live, I was able to buy back my call debits or call credit spread position on that for nothing, and then I was able to continue holding the debit spread side of that until price popped up, and I was able to profit that even more. And then the put side all expired worthless. I don't care, because it was covered by my initial debit or credit spread sale. So being able to trade complex options is certainly an advantage in that. But the idea of, as complex as they are, they're very simple to trade once you have a basic understanding for what they do and why you would make those adjustments to that position. So options trading can sound like a lot to digest. It can sound overwhelming as far as what you need to know, but it really doesn't have to be. You can just keep it simple, and you can just put it into respect of directional. And we know that the market will do one of three things on any given day. It'll go up, it'll go down, or it'll go sideways. And there's different strategies for all of those. There's also different strategies that you can carry over from day to day, where if you're expecting no direction or you're expecting a range day, you can take advantage of that to build a directional trade if you think it's going to be bullish the next day or bearish the next day. But if you're sure it's going to be volatile the next day and you're not sure what the direction is going to be, you can also take and build a neutral position. And then you can trade from neutral. Learning to trade from neutral is very clutch, because you can take advantage of any volatility swing. Doesn't matter what direction it is. About a year and a half ago, I was demonstrating that very, very well with Ford, running strangles instead of condors. Strangles are a lot more simple. It's just a call and a put. And when I was running those, all Ford had to do was make like a a $2 move, and I was able to rake in like a 480, 500% return on a neutral position overnight. So that's the kind of stuff you can get into learning, is how to trade from neutral. All right, we've completed our flag. We've made a mean revision here with a wick. And now we're expected to be either breaking down or breaking into a trend. Well, a short-term trend. It would be like compression. Remember when I was looking at the pre-market here, seeing this range expansion and knowing that there's a possibility of forming a range compression coming out of this range here, thus forming a diamond pattern. It could very well still be. thing about diamond patterns is they don't always have to be exactly flat. They can be kind of skewed to the downside or skewed to the upside in appearance. I'll get into that in a moment. I want to see where this flag goes first.
Good morning.
Morning. How's Ricardo today?
Excellent, man. I just got back from a workout,
Nice.
early workout, so I'm ready to lose some money.
No. We need to make money. That's what we're here for.
I'm ready to try to keep my money that I have.
There you go. That's a good way to look at it.
That's more
We
positive.
lose weight, we make money. That's what we do, Ricardo.
There you go. If you focus on keeping your money, you by default should be making money. Oh man, I'm still getting a kick out of the percentage return on this Intel Corporation position. I just love looking at that.
Jeremy, I've funded my account. I've paid for the data, so I'm all ready to go live trading. Okay, but I'm gonna wait for a solid trend day before I go anywhere. So I'm gonna take a couple of days off next week and hopefully get one. Yeah.
Ideally, that'd be awesome.
Well, we'll see.
And is that going to be in futures, or is that going to be in options, or?
It's gonna be an MES.
Okay, futures, perfect.
So I've funded my account. I know what my risk I'm willing to. I know what my risks are. I'm ready to trade. I haven't got it linked up to my TradeAway, but I am. My Trading View. But I've got what I need to work with, I think. But more than anything, if you're working with a solid trend day, I'm not going to say you can't go wrong. I know the risks. But
Right.
I think that's the best bet to dip my toe into the water for trading live, you know?
Oh, absolutely. And
Yeah, you agree with that
that's
thought?
the most important lesson of all as far as trading goes. Hands down, the most important thing to learn is patience. And that is exactly what you've demonstrated right there in that whole statement. Patience. You're going to wait for a trend day.
Yeah. The next question was going to be, I'm gonna sort of pick your brains on my days off now and see, look, is this going, or is this a trend day? Are we definitely in one? And I'm gonna be asking some really basic, stupid questions, and you're probably going to be thinking, oh, this girl shouldn't be anywhere near a live account. But I just want to be sure, okay?
Not at all. And feel free to pick.
Okay, thank you. Cheers, Jeremy.
No problem. Cheers to you too. And, historically, I've been pretty darn good about picking those trend days out. Even when most people are thinking it's not, I can usually see when they're coming. I have a knack for that. No, not to break my arm and pat myself on the back, but I have a pretty keen eye for picking off trend days.
No, you certainly do. That's why I'm going to wait for you to sort of confirm that we are on a trend day before I do anything. And even then, I might just sit there and watch.
And it really comes down to that programming thing. If this, then that. I mean, it's just that simple statement. If this, then that. So if I see something where if this breaks, I know that's going to be a trend day. Or, if this does not break, if it stays in a range, I know it's going to be a range day. Ideally, witching days tend to be range days, but they rarely do have a chance of becoming a trend day. So I might go so far as to pick off a shorter term liquidity zone on SPY. I'll do that with the Webull drawing tool because I like the fans here on TradingView, but I'll see if I can identify where the range is going to be so we can at least get a nice midday swing out of today if things go right. And then note to self and note to others, 0-day trades on a witching day are very risky, but they're not impossible. So because it's a witching day, the implied volatility on those will be quite high. So if I went and looked at the pain zone, it'd probably be about $12 to $14 wide on SPY right now. Later in the day, if it comes down to like between 5 and 8, somewhere in there for the 0 days, I'll consider finding a range, and if I can define a liquidity zone that I could expect the price to go at least from A to B on, I might be able to pick out a quick scalp on that in midday. So with a little luck, we'll get the setup, and if we don't, I don't have to trade it. I can just go back to that key factor that makes or breaks a trader is patience. There was a famous quote that successful traders will spend 20% of their time trading and 80% of their time waiting, whereas typically unsuccessful traders will spend 80% of their time trading and 20% of their time waiting. I kind of will say that, and it's like one of those follow what I say, not what I do situations, because I can be nimble enough to trade that 5-second chart to where that goes out the window. So, but I got to pick my days to do it. Some days I can, some days I can't. So that's the whole being patient part. So overall, my swing trades are definitely sticking to that rule, but my day trades, definitely that rule goes out the window. But in the midst of that, when I'm watching the 5-second chart and I'm finding the 1-for-1 moves, it kind of comes back into play, right? Because I'll sit there and wait for a clean setup before I pick a 1-for-1. I won't jump into chop typically. Like here we're setting up one. There's leg, there's accumulation, and as long as we don't punch out for a mean revision, we could get a nice bearish 1-for-1 right down here at a 480.85.
Scalped that little move for $10.
Nice. See if we get a bigger move on the break here. It's coming. Either we'll get a mean revision or we'll get this as an accumulation and a leg for leg. Right down to about 440.85. Got Tesla kind of set up. We're 1-for-1 right here at 260.270 for the day. We'll see if we get accumulation in a 2-for-1 and finish the move to the top of liquidity, which is way up here to 282. Or if we just kind of hang out here and go sideways from here. Meanwhile, Intel is kind of chilling. Oh, that's a nasty looking tweezer top on a 5-minute. I have July 22nd or 21st expiration on that position, so I've got plenty of time to adjust it. If I find that credit spread, I can go and buy it back for about half what I sold it for. So if I can buy it back for 4, I still have a free position and I've generated income on it. On half of it. All right, last couple bars. This is going to tell us either we're going to get a quick mean revision right up to the common line up here up at 441.96, which it's looking like, or we'll get a quick breakover and run for that full 1-for-1. So we got a Bollinger sell or short entry here. Don't take that trade yet. Wait for it to tell you what's really happening. You want to catch a break below here. You don't want to try and play here. This can fake you out and finish right up to 100%. Right up here to 442.16 even. And I've been asked this before, and I'll answer it again. I've been asked what the -2 and +2 means. It is simply telling you what you see with Bollinger Bands. And that is a 20 period is the middle band. The upper and lower bands are just 2 deviations from the middle band. So when you see the +2, the signal is it poked the lower band, which is 2 deviations from the 20 period. The expected move is to touch the 20 period, and it sure did. +2. -2. Done. If you're nimble enough, you can take those as signals and just trade your futures with them. But at some point, you're going to have a ratio issue. You'll still be net positive, you'll still be net profitable, but you're going to find yourself, making like a 60-40. You'll be 60% profitable, 40% of your trades won't be. But for the most part, those signals are respected. But this is one of those trust but verify situations. Here's an example here. It would have been a little hard to take this trade, right? There's a little poke here. And the middle band in this case is this guy. It's orange. Well, purple, unless I highlight it. It's weird. But at any rate, that is the middle band. It wicked exactly to it on that signal. That would have been a hard trade to get out of. You probably would have caught some slippage on there. You might have made one deviation on that, which is, gosh, you would have made 1 point on that move. Maybe. This signal here was a little better. It gave you a little bit more than 2 deviations. But it also only gave you about a point and a half. So you can trade those on your futures. But man, you've got to be quicker than me. Alright, so we've accumulated. We didn't reach the revision. And we're just dragging on sideways. But what do we see on the 1 minute chart? Look at this mini diamond. We got a bear channel and a bull channel out of this. There's your bear channel. I'll draw one line. So if this doesn't break this angular, we'll get that 1 for 1. But what do we see on our bigger picture? There's angular support here. What's it do? It lines up this diamond too. So let's wait. We know that to get this 1 for 1, we first got to break the floor. We got to break our key support area, which is this here, 441.35. Diamond patterns are notorious for faking out one way, hitting exactly to mean, or the middle width of the diamond, high and the low, and then
So Jeremy,
yeah.
So I got a little $15 scalp on that little
This guy here.
tweezer. Yeah, on the way down there, because I kind of knew it was gonna retest a little bit, and then I just scaled in, and then it was quick.
Right.
Would that be the worst thing to do, or?
I mean, if you're getting those and you're successful at it, certainly don't quit. I mean, that was a fairly decent signal, but it was one of those ones where if you're not quick enough to see the revision here, or to realize that it's just telling you there's a 2 deviation trade happening here, if you didn't catch that and realize it, and you got stopped out right here, you'd be very disappointed. But if you were short here, and you kept your wits about you and realized that that was erroneous and a poke, you could have stayed short in there and done that whole move. But ideally, you would have ignored this entry and went for this one in that situation.
Mm-hmm. I've been good on those. I've been profitable on those, actually.
Good.
But they're very quick.
And they're very, very quick. You got to be like Johnny on the spot with that close button.
Yeah, definitely. I actually could have got 20, but I only got 15 out of it.
It's still profitable. And
Definitely.
the other thing is, like, you'll display that you've got a $20 return P&L on that trade. You'll hit the button and you realize that it gave you slippage. It gave you the base of the next candle because you were a market order at that point. So it's very very hard to set up a limit order that fast to get the whole move. And when you've got to get out quick, you don't have time to set up that limit order. So you got to use the market order, and you'll end up with a little slippage there. So like you'll display 20, and it'll by the time you hit the button, you'll get 15. That's
All the
okay.
time. It happens to me all the time. Yeah.
That's okay. There's nothing wrong with that as long as you're still accumulating some base hits and making
Yep.
money on it. It all adds up. But it's like
I've hit my my daily profit for the day.
Cool.
Right
At least
now on
that.
2 trades.
Now your mission is to keep it. But
Yeah.
we're
And especially on Fridays. For me, Fridays is no good. I usually give a lot of money back. So I gotta stay disciplined.
yeah, the discipline's going to be the hardest part, and that's going to be that, be
Walk
able to
away,
wait.
Ricardo. Walk away now.
That's it.
Right?
Now, not to say that it wouldn't be worth practicing with paper on a Friday like this, because it'll sharpen your skills at the very least.
Well, I'm still on paper. I'm not live yet.
Okay. Let's say if you're making real money on that, keep that. That's definitely where your patience is going to pay off. But you could still continue to sharpen your skills by flipping to paper at that point. See, like here, we had that fake breakout on the base of the diamond there, and look, it ripped a face off in the other direction. So now we're back to our mean revision again. I love spotting those diamonds on a 5-second chart and a 1-minute chart and going, hey, I know what this does. You get enough screen time, you start to pick those off real quick, just kind of glancing at the chart, and you'll be able to think on autopilot much faster than you can constructively think with your conscious mind. So it's like I always say, train that lizard brain and let it do what it does, because it's very good at it. We might even get a bullish 1-for-1 and push 442.40 out of this. There's accumulation right on our mean. This is our mean line right here. Now we've got leg possible up here to 442.40. Let this break though. It's got to tell you which way it's going to go. Mean lines love to reject. Bam. Look at that. Right to the angular on the diamond, dude. Look at that. Poof. There's a long entry signal there. I wouldn't trust that. Not here. Man, Tesla's just killing it. It's kind of out of gas here though, so I'm going to sit and maybe flip some position on Tesla. If it's got enough pepper in it. The other day, I don't know if you guys have been kind of keeping up with my wheel trade.
No hagas eso porque voy a hacer vacuum, okay? Para wasting your time.
Hot mic. My wheel trade on OPEN, I almost got a sign on $3 covered calls the other day. And fortunately, it pulled back below to where I was able to break even, buy back the covered calls on a pullback. And then at that peak when I was in danger of being a sign on the covered calls, I also bought back cash covered puts there for about an 80% return. So I was like, well, hell with that. Cool. Pulled back, sold the puts again at the base of that, and then left the call side open until price returned to 3, and I was able to move it up and roll them out to 350. 350. Wait, was it 350? Hang on a second. Yeah, 350 strike. And I'm looking to buy those back today for pretty cheap, so. Sometimes you got to be nimble with the wheel trade strategy, and if you're trading kind of in a choppy accumulation like it has been for days on end, you kind of get the idea that you've got to make sure you try to avoid assignment. Now, assignment isn't the end of the world, it's just the end of the position on a call. So like you've got to basically start over. That doesn't mean you have to
Everyone.
reset your factor of what your income versus cost is to keep your cost basis in. If you want to continue with the original data, knowing what your cost basis is overall, you can do that. You can keep that in your journal. So like if you've achieved a negative 37 cent per share cost basis, you can certainly keep that as a cost basis if you get assigned and then just re-enter the trade later. Journal it both ways at that point though. So if you get assigned on a covered call, start it over, because your discipline is going to be based on your initial. And when you reinitialize the trade, you're going to want to make sure you keep track of your new cost basis. In other words, you don't want to give yourself the idea that you can slip a little bit and give some back with your original cost basis. All right, bam, right back up to there. 442.40 was the target, and it almost nailed it. 442.32 or 33 right there. It'll extend. Bollinger Bands are still pointing straight up at it.
Good morning, everyone.
Morning. I heard you earlier, and then I didn't get a reply.
I don't know what's going on with my computer, but I'm having a hard time to communicate with you, Jeremy. Anyway, thank you very much for the Bollinger Band explanation. It was really beautiful, and for the first time, I just learned how that works. So I appreciate it. Thank you very much.
Awesome, no problem. You talking about the article?
Can you explain it one day, like 2 weeks ago?
Yeah.
You know how that works? It just opened my eyes on a lot of things, like when it is overextended or overbought. I can see it, now, and I know it's just gonna correct.
Right.
And it is like 80% correct.
It's
a lagger indicator, but still, I feel
it's pretty awesome in that respect. It does give you very clean overbought and oversold signals, and that's exactly what it's designed for. So you kind of get a good idea. You can put them on any time frame, and you can understand a lot more about price action with them. And that's why I kind of go under the moniker of Bollinger Bands are like training wheels for price action study. So it's like you know when you're leaning on one wheel, you'll cross the center onto the tires briefly, and then you'll end up leaning on the other wheel.
any scan can use Bollinger Bands. I was trying to see if I can formulate the scan using the Bollinger Band, but I could not find.
You can, but you've got to combine it with a secondary indicator. So you can confirm a little more. You can narrow your focus a little more with, or filter your scan by adding Bollinger study to it. So you can say if, and this is particularly for swing trades, if you get a signal like the 8 crossing the 20 on the daily chart or the 2-hour chart or something like that, you can filter it further by noting if it is a lower Bollinger Band poke or if it is a upper Bollinger Band poke. So you can kind of pick off the ones that are just a quick spike in price where it broke on the convergence and divergence of the 8 and 20, and it just returned back to the 20, or if it's actually going to be a trend. So you can kind of make that into an additional filter for scanning your swing trades. It does very good with that. All right, mean revision right here.
Thank you very, very much.
No problem. Yeah, I've found that recently for me, it's been fun to go and pick off CNBC's top 10 and just analyze them. So I can kind of narrow my focus in the market to what all the other analysts are chatting about. And then anytime they mention it, it automatically brings volatility to the equity. So a lot of other people are going to kind of follow their analysts. And I find that I can go and flip through, 10 or 20, or in last week's case, what was it, 26 charts, and out of which I can find 2 or 3 that are just beautiful setups, like PANW was just awesome. I picked that off of CNBC, and they had been watching it for a couple weeks prior, and I've been able to pick off 2 clean trades out of that one. They do mention other large caps that we look at all the time, like Nvidia, Apple. They'll look at Disney and all the other stuff. That's fine too. I can pick those off as well. But when they mention them, they usually will put out an analyst price target, like upgrades and downgrades. So when a bank says, "Oh yeah, this is going to be here, this is going to be there," that gets my attention, because whenever they upgrade or downgrade something, I know that there's going to be, one, an institutional price target on the chart, 2, a better way to filter it, so where if it rejects that price, or if I know there's no way in hell it's going to get to that price in the next few weeks, I can laugh at those guys and be like, okay, there's a trade set up here. And whenever they make a statement saying they're going to put a price target on something, half the time you got to wonder if they're getting called by market makers to say, hey man, make this price target statement, and we're gonna sell into this strength and unwind our positions, or we're going to buy into this trend when people are afraid, it's like when the price target's below the current price. We're going to buy into the fear here. I almost kind of wonder if that phone call gets made, because you kind of got to take that analysis target for what it is. It's just, it almost seems random in cases, but then when you think about, the tinfoil hat theory applies to it, you're like, are they saying one thing and doing another? But the price action analysis, when you go and you do a good analysis on the chart because it was mentioned, you can see right through that stuff. It's just kind of cool to do, but one way or another, the thing to know when you're picking off a list of analysts' announcements on different equities, it just gives you a way to narrow your focus, so that you're not going and using a scanner and picking through like 200 or 300 charts to find something to trade. Instead, you're picking through 10 or 20. All right, Intel walking right back up to resistance. I want to see that thing break out with some force above that $36. If you've been listening to me for more than 2 months here, I've had that $36 price target on Intel for a long time now, and it's in that range now. Doing very well with it. It can go higher. That thing could go all the way up to 42. There's an expected move that's possible to 42 on that thing. Let me see here. Get the daily chart on it. So we've got upper limit here on this revision to about 40.77, and then look, there's a couple big control bars in this guy. Can take it to 42. There's one right there, 42.22, top of this guy. And if it extends, we could go to 44. Look at the weekly chart though. Where's the mean revision of this guy? 44. I'd love to see that go to 44. 36 came from this revision here. This was just this leg down, so you got one leg, accumulation, 2 legs, basing, and return to mean. That's done. Now we're just waiting to see if it's going to continue to roll up the entire trend mean revision to 44. So my debit spread is actually up there at 40.41, or 40.42, sorry. 40.42 and 44 was my spread once I flipped half of that into credit spreads. The 42.44 is the credit spread side, the 40.42 is the debit spread side. A little extended beyond my 36 target, but it's out of the money enough to where I get in cheap and I get a really good shot at making a high percentage return on that. All I got to do is size it up, play to win. And doing very well with that. a lot of my friends out there are institutional traders. They'll be talking to some of their friends who make these huge percentage returns on options positions, and they throw shade at them. They're like, oh, okay, well, yeah, you made a 300% return, but you only bought one, or you only bought two. Well, look at it this way: it's still a success. So, like, if you've doubled your risk in any position, that number's irrelevant, and usually it's going to be proportionate to your size of portfolio that you have to trade with anyway. So if you're running with like a $50 account or something, and you make a 200% return on a $5 risk, you've taken 10% of your account and doubled it. There's no shame in that. The practice is in the art, or the art is in the practice. So you've developed a process to be consistently profitable. That's the important part to grasp there. Someone who's throwing $100,000 around in any given trade like that will tell you things like that. Oh, whoop-de-doo, you made a 200% return. And I'll tell you, I've been there. I've been that guy that they throw shade at. But I slowly keep making these little base hits. I slowly keep building up these very profitable trades. And what happens? My account balance grows to the point where I'm throwing a few $1,000s around into trades. And in this particular one, I mean, it was an $800 risk. Compare that to a big, big fish, and yeah, okay, it's still peanuts. But it doesn't matter. I'm still accumulating growth in my account overall. And I produced an 80% return week to date the other day, based on a lot of different positions that are going very, very well for me. So I'm throwing size of like 100 contracts or so at a time into these positions where I'm making these large percentage returns. And that's just basically taking the process that I developed from small account and making it into something that is scalable into a big account. So you develop the process, you build your skills, you slowly build your working capital to something that can be meaningful and can literally sustain, your ability to survive in this world and pay your bills. And you eventually grow wealth out of it. So it's the process that counts. Don't let anybody discourage you by saying, yeah, you made, this much on a $5 risk, whoop-de-doo. Don't listen to it. You listen to the fact that you developed a process and you made it successful. And it just takes time to scale that. Eventually, you'll be throwing $10,000 into a trade and going, yeah, I made a 200% return. Oh, cool. Yeah, I bet you didn't have much size in it. Oh, yeah, well, here's a P&L from that. Bite me. You stick it in their face, guys. Do it. Because you're going to be like finding yourself in a point where sometimes some of these heavy hitters will start to listen. That's where I'm at now. I've literally got the ear of some pretty heavy hitters, and they're like, wow, okay, now we're interested in what this guy has to say. Because I'm making consistent high percentage returns on options trades that most people wouldn't even do.
Well, the other thing I think, Jeremy, is that the strategies that you're working on are fairly complex, and a lot of these guys just can't grasp some of it. So.
I think you're right. And like, I go and currently I'm talking to a disruptor. Like I'm actually talking to Matthew Tuttle a little bit back and forth. I'm kind of breaking the ice with that. The fact that I can take some of these somewhat complex strategies and explain them to pretty much everybody I meet, regardless of where they're at. And that's my purpose in life, I feel, is to be able to explain some of these strategies in ways that the average person could understand. And it takes all kinds. I mean, it could take, it can take this strategy and explain it to billionaires. And eventually, if they get it, hey, the world changes for them too. Now you've got both retail and institutional traders building synergy. And understanding these complex strategies takes a little bit, yes. But when you get it, dude, it's just like riding a bike. It's just a money machine.
I've been watching the Ford this morning and checking out the puts and watching how they're reacting to the price. I mean, the put for out a month, it's up like 8 cents over what it was this morning.
Nice. That's those liquidity zones, man. They are freaking gold. Knowing where those are.
Is Ford still good to wheel trade?
It's not the best percentage return for a wheel trade compared to money outlay,
But to learn?
but it is super easy to learn because it moves kind of gently. It doesn't produce a huge amount of risk for you, and makes it so that you can learn the process and hone that process to a T.
Because I remember we were practicing on Ford before when we were trying to do the wheel trade.
And effectively we were doing more of a synthetic wheel trade. We were running strangles, so we were trading from neutral. And that's the other thing, is it has enough options liquidity and a tight enough bid-ask spread to do exactly that with. So you can develop the process for the wheel trade without having a huge amount of risk in it. You don't have to risk, $2,800 in this to wheel trade it. You could just do it with synthetics using the strangle strategy. So that's kind of another way to take that complex option strategy and turn it into something a lot more simple.
What about Nicola, Jeremy, for that strategy?
I haven't looked at Nicola in a while. Let me get that on here.
It is up since the last 2 days from 60 cents to now 150, average 155.
Wow, and it's got plenty of options liquidity too, I bet. You could wheel that pretty cheap.
Yeah, that's what I'm thinking, to see your video regarding the wheel trading and see something like Nicola and try to learn from it.
You'll certainly be able to learn the process on it. There's certainly plenty of volatility to earn income on options to keep your cost basis below price. Just be careful with this one though, because that's one hell of a long-term bear trend with a lot of volatility. And looks like our mean revision target currently is just $2.29 right to the 200 period there. So you could do that, just be very cautious and be very understanding that you're going to have to be nimble with that one. So it wouldn't be the best one to learn a wheel trade on, but it would be a good one if you already had the skills to wheel trade to generate some quick income. I've been doing that strategy with open, and it's phenomenal. You can see all I've transferred all my exits and entries onto the chart in an attempt to keep my journal on this, but you can see that Webull kind of bastardized it. So like when I go to drag the chart around, it randomly grabs one of those and puts it in a stupid place. But you can see it's pretty busy to run a wheel trade strategy. You got to know your price action and know when to take advantage of these moves. And that's what you get from that. I wish I could have had the fortitude or the forward knowledge or forward looking to be able to lock these into, or lock them, where they're at, like this button here. Because that wouldn't have been a disaster when I go to drag the chart around and I move a couple of these by accident. I'll go rebuild it later. But my point is, it just shows you how busy a wheel trade can be. And if you're nimble enough, you can generate tremendous income on this. Currently, my cost basis is below zero and building to a point where eventually I could probably have 100% in negative risk. So I could be negative, $3 a share in a short amount of time from here. Currently, I had barely avoided being a sign on $3 calls here, and the other day here, I was just mentioning that, and I was able to buy back my puts right on that open, and then I was able to, and I don't have those labeled here because I haven't been able to keep my journal up with it, but buy back the puts on that, and I was lucky enough to buy back my covered calls on break even because I sold them back here. I didn't sell them here. So it got a little hairy there for a moment. If I would have waited another day, I could have sold the 350 covered calls and did fine. I broke even on the covered calls, made a nice profit on the cash covered puts that I sold back here. And now it's just a matter of I'm waiting for this accumulation before I go and sell any more options on this thing. So I'm currently mostly flat except for the fact that I do still have a cash covered put open. But this has been a great wheel trade strategy execution. And this is where we're going to look into a little bit more detail here. Damn, I dragged another one. I hate that. Let me hide my drawings. So effectively, we've got similar situation to Nikola. We've got a nice long descending trend. But I picked an area where instead of it being just a quick squeeze where all the shorts are covering, I went and looked at this as a big flattening after its 52-week low, and then a slow buildup of a rounding bottom here. And I've done this before with many different strategies. I've looked for this kind of thing where you get this long descending trend, stock gets beat down by shorts so much that eventually it finds an area of control where it finds stability. So there is a chance that this can turn into a bear flag and break over further, and then they go through a reverse split, and shit hits the fan, so to speak. There is that chance, but for the most part, the probability of this reverting into a bull trend and starting to retrace all of this price action from the left here is fairly high. I knew that $3 was a great target for this, just based on this move here and the fact that it rejected after this squeeze here and then continued to roll on to a reverting trend. So if this continues to have a slight bull trend, I can continue to generate as much income as possible on this position over time and eventually have a massive win on my hands. It'll take a long time, but I can hold this as a position, and eventually, this being in real estate, eventually if they start paying a dividend, I'm golden. That goes into my retirement account and stays there. So it's just all a matter of kind of taking into perspective what you see on the chart and then picking off a low, very cost-effective equity to wheel trade. And I'll probably keep this open for as long as possible. And if it starts to creep up to these levels where I start seeing the gap moves possible, I may just be able to go far enough out of the money where I'd be okay with that. I mean, having it trade at $5.50 and selling $8 covered calls isn't going to produce a lot of fruit, but I can certainly continue to trade at the money cash covered puts very effectively. So it kind of skews the way you wheel trade it as the trend gets steeper, but it's still the same process that you developed while it was going sideways. Plenty of income to be had out there on options, and this is kind of the thing I've been talking back and forth with Mr. Tuttle on. Is he's got this this set of ETFs. He's got SGIM and LGIM. Let me break those out real quick. So you can see from IPO, LongGIM has done very well. He came out with SGIM first. Now, if you were a well-known analyst and a well-known investor, trader, whatever, and suddenly you found yourself making a few more inaccurate calls than maybe you thought you were doing, and then suddenly somebody comes out with an exchange-traded fund throwing shade at you, basically saying to short everything you're long on. Will your analysis change? Will the light come on and be like, hey man, I must have been doing something wrong for this to be coming into existence here? Should I change maybe the way I look at the market? And certainly that's been reflected, because as soon as this thing started to catch on, it went down. Why? Suddenly the analytic skills were refocused, and well, we needed to be more successful if we want to maintain relevance in the market space. You can certainly see that's happened. So now it went from, I think it was at its peak, Jim was like at an 80% loser rate. So like you could short 80% of what Jim is long on and you would make money. That was That was a phrase that we used to say quite often for the past, going on 5 years now. And then suddenly it changes when someone throws an ETF together and says, hey, let's just short everything and keep it in an ETF. Very cool. Because you have two ETFs. You have the SGEM and the LGEM. It's balanced. So the managers make money on that. That's a great idea, a great concept. My idea is, why not introduce a third ETF that basically wheel trades everything Jim says or talks about, or everything that analysts are talking about, regardless of their bullish or bearish sentiment on it. So effectively, you're in it for the options income, because anytime these people speak about it, it brings attention to those equities, and anytime there's attention to equities or participation in the price action, what happens? Implied volatility drives the options price up. So kind of a genius idea. Well, let's wheel trade everything Jim says, and with the liquidity that would be required for that, or the amount of capital required to do that, if you've got enough capital to run an ETF, you've got enough capital to wheel trade everything Jim says at some level. Even if it's just, one contract per equity that he mentions, doesn't matter. The idea is that there's a balance here, and the ETFs will be successful because they're paired. We got one bullish and one bearish. So, either one's going to win or the other's going to win, but they're both going to balance. If you're short one and long the other, it's going to balance, regardless of what Jim's success rate is on his call-outs. You're going to balance. It's going to go sideways. So effectively, as much as I hate to say it, these will eventually be depreciating assets like UVXY. They're not leveraged, but eventually that balance will be eaten up in the fees involved in keeping the lights on for an exchange-traded fund. There's going to be money coming in and going out from investors, whether you're buying or selling the shares of the ETF. That's fine. It will develop some growth level there, but overall, as long as the manager fees involved in running that, because it takes a team of traders and a manager to run an ETF, over time, if you don't have liquidity coming in from people buying shares of your ETF, there'll be an equilibrium that will eventually possibly fail, where the money coming in from people buying shares of that ETF might not be hanging around, and eventually the management fees might eat into that liquidity. That can happen. We've certainly seen that happen with many successor ETFs. There's some that just depreciate forever. Let's look at TQQQ, for instance. It tracks the QQQ, but overall, it's been a depreciating asset. So while it was bullish, did very well, performed pretty well. And then while it was bearish, man, it took a hit right back down. Overall, it found equilibrium, and as the market's going up, it's certainly going up. But the management fees involved in that versus investment in it tends to kind of falter a bit. So the wheel trade strategy, as Amy has applied to TQQQ here, has been very successful. And that is the comparison or the litmus for what I have in mind for running the LGIM and SGIM, maybe making a third ETF that wheel trades GIM. So if a third ETF comes into fruition, because I have been talking about it, it's no secret. It's not like it's some sort of project I'm working on. I'm just kind of trying to bend the ear of Mr. Tuttle there and be like, hey, look, dude, a third ETF that wheel trades what Jim does would ultimately be highly successful, because it would generate income off the options liquidity of everything Jim talks about. Anytime there's attention brought to something, we know the IV goes up. Why not take advantage of that? So that's the plan. That's the idea. And that's what I'm kicking out. So when I'm talking to some of these heavy hitters, that's one of them. I'd love to get him in here with us and kind of talk about some of the things he does with the amount of trading that he does in there. That'd be great. Be an awesome webinar. Then to go and explain a somewhat complex strategy to someone in that caliber and then pull it off. I would buy shares of a wheel trade GIM ETF. I rarely invest in anything, but that's something I probably would. It'd be like putting your wheel trade on autopilot. Just a disclaimer. That's not investment advice. It's just my idea. All right. So we've got our diamond pattern pretty much set, right? It's slightly skewed to the downside. We're likely to just finish ranging all day long from this point. It's going to be kind of a boring Friday, unfortunately. We've got our range. We did some good trades in here. That's about spent. And I'll probably wrap up here in just a couple minutes. But pay attention to what this diamond does later on. In fact, I'm going to draw it on my Webull account here. Let's go throw SPY on here. I'm going to have to make my drawings appear. And will it show up better on the 1 minute or the 5 minute? Probably the 1 minute. Yeah. More or less we have a diamond pattern. It's slightly skewed, but we'll draw it anyway. About there. It's more of a parallelogram, I guess, at this point. Ugly diamond, but we still get channels out of it. Nah, we're like here. Sorry. This will be a common trend line. Let's make that a different color. Might have to skew this one a bit. So this guy would actually be here. That's better. So we're down on into the bear channel that comes out of the diamond pattern. So this will be our regression for the bear channel. If it breaks bullish, this will be our regression line for the bull channel. And if at any point price breaks this angular on the bear channel, we know from experience on the diamond pattern, price does not like to hang out in this area for too long on a divergence from the peak of the converging lines on the output side of the diamond pattern. So lo and behold, we have a known liquidity zone that is this entire range. So if by about 12 o'clock you start to see it kind of pull up out of this bear channel, know that it's very likely to make an A to B, where you've got base of liquidity, peak of liquidity. And look, price has been pretty much relatively in that zone all day so far. So if you see it accumulate towards the end of the day like that, you've got a fairly good probability of making at least half of that, possibly a whole A to B. So it gives you about a 25 or 30 point move possible for a swing trade. So certainly keep an eye on what comes out of this diamond pattern. It can be a follow through on this common trend line. In fact, I'm going to change that to a color that we can recognize against the others, because I know the 200 period will be confusing if I make that yellow. But kind of watch what happens with this common trend line. If it starts to break back into the upper edge of this liquidity zone, it can do an A to B sooner. If it waits until it gets towards 1 o'clock, 12:30, 1 o'clock instead, it can certainly happen later.
Hey, Jeremy, I gotta
It
get.
was going to be a federal holiday, so they're going to close banks.
I think it was the year before.
Yeah. So
What's it called?
Juneteenth.
Juneteenth,
June the 19th.
Yep.
basically.
So it's bank holiday Monday with you guys then, yeah?
Yes, ma'am.
Okay, all right, I'll make a note of it. Thanks, guys.
It's a fairly new holiday, so a lot of our friends out of country will.
What's he celebrating?
It's kind of like,
Don't get me wrong. Let me guess. Independence from Britain.
no. That was the 4th of July. That's another holiday.
I thought you might have two, just to sort of, really make a point of it.
Yeah. No, I think it has to do with some of the cultural stuff, Black History Month and all. Um, I know it's a fairly new holiday. It kind of came to be, but it is what it is. I don't know all the details of it. I just know it's a holiday.
Yeah,
That's
And
all
isn't
we
that
know.
Father's Day weekend too?
Yeah, yeah. Father's Day's
correct.
Sunday.
Yes. Happy Father's Day to all the people out there.
Thanks.
To you as well, Jeremy. Have a great week and all the best in the market, guys. Take care.
You
See you,
too.
guys. See you, Ricardo. Take care.
Yeah, I'm gonna
Right,
probably.
it's a 3-day weekend. I'll make a note of that.
Yeah. And yeah,
Yes, Jeremy, it's Biden make date for the Black History
yeah.
last year. So yes, you're correct.
I seem to
So
remember
it's a
something along
new
those lines.
things. Yeah, something dedicated for the Black History. So
Is it June the 19th every year?
Yep.
Right, okay, cheers.
You too. From what I understand, I'm also grateful. I know there's I can't remember if it's the Jewish religion or one other religion. There was like a world record of religious holidays. I can't remember if it's Hindu holidays or Jewish holidays that had more. But imagine if we closed the banks on every one of those. Holy smokes. We'd have like 20 trading days a year maybe. So I'm grateful. I mean, I don't mind adding an extra holiday. And certainly, as much as I love trading, it's great to have a day off once in a while and just be able to do things other than trade or other than analyze targets and price and stuff.
well, you need to go to England. Victoria will tell you they have bank holiday like crazy there. Like
Oh, I know.
maybe 2 months a year is a holiday.
Yeah.
So
We do have a lot of bank holidays, yeah.
yeah, it's amazing. Every other week I call my brother. He said, today is a bank holiday. I said, God damn it. We have only 7 days a year, we cannot catch.
I know. And then there's more and there's more bank holidays in China too. There's a lot of bank holidays in China. It's crazy, but at least, like I said, at least we're not like completely tied down by any particular religion for holidays. It's pretty diverse here in America. So we've got some religious holidays, some just general bank holidays. We've got some stuff that's related to history, like we got President's Day, and there's all sorts of fun stuff. It's a big mix here, and that's in the U.S. spirit. It's what we get. Is we are a mixed culture, and therefore we can mix it up.
You think being like so diverse, they'd have more bank holidays, not less?
It could be, but I guess it does take an act of Congress to make a holiday come to be. So, in this case, it took a president to say, "Hey, this is a holiday now." So
They will not allow it, Jeremy, because it hurts the economy and the corporate making money. So
Right.
it's no way in earth giving more times off. I mean, they are fighting for women's to have like a few months when she's pregnant paid off.
Right.
So
which a lot of other
I-
countries do very well.
I don't see it, to be honest with you.
Yeah, I agree. It's just like I said, it takes an act of Congress to get anything done, and that's effectively it. Not to get too political, religious, or into any kind of particular race, sex, or creed here, but that's what it is. We've come to accept it, and things happen. Moving forward, I'll wrap up real quick, and then everybody can have a great holiday today. Looking at the base of our liquidity zone, suddenly we have a reaction here going into the wrap of our broadcast. We could get that A to B even sooner. We could see it like 11:30 start to play out. But just keep an eye on this angular resistance here. That's going to be the more important part. And if your follow through is going to be paused, that's likely where it'll be paused. So if you get the A to B starting now, pause here, accumulate. If we go sideways for a while underneath the 200 as it's out there, we could get a very easy pick of a 1-for-1 going into the middle of the day up to that 44250 target. So knowing your liquidity zones is awesome. And then to boot, this little gap here between our original 1-for-1 and our peak out here, those become supply and demand zones like Kevin would put on. So this would be a supply zone or demand zone. This would be a supply zone. So you can take two completely different trading styles, analysis styles, and put them together and get the same answers. Just one more example of that. But I know this is a liquidity zone. I know it's very likely to complete moves A to B. And at least half. With that, I will say adieu. Everyone have a wonderful weekend. For all you fathers out there, have a great Father's Day. And certainly
You too, Jeremy.
take some time to kick your feet up on Monday. Relax. I might even do some barbecuing. I might see if I can go pick up a brisket. I haven't had a smoked brisket in a month and a half. I got to do one. Maybe I'll smoke a brisket all day on Father's Day. That'd be cool. All right, then, guys. Have a wonderful one. We'll see you around.
Yeah.